For many years on my channel, I have talked all about how important it is to have proper estate planning, but unfortunately, not everyone takes the steps that are needed to make sure that there will not be any serious problems after they die and when it's time to transfer assets to your beneficiaries. Guys, this even includes celebrities. Recently, it was just revealed that 3 children of legendary pop singer Michael Jackson and his mother have been blocked from accessing hundreds of millions of dollars locked in a trust fund that he left behind for his family. In this video, I'm going to tell you exactly what is going on with the Jackson family situation, and I'm going to let you know what steps you need to take to make sure that something like this doesn't happen to you and your family. Without further ado, let's dive in. So here's the situation. The IRS recently carried out an audit of the estate that Michael Jackson left behind to his family. During their audit, the IRS claimed that they found that the estate undervalued its assets and they actually owe over $700 million in taxes and penalties as a result. So now Michael Jackson's family members are in a heated showdown with the IRS, and this is not the first time this has gone down. In fact, Michael Jackson's estate was involved in a lawsuit against the IRS back in 2021 for the same reason. It won the case, by the way, but it appears that the IRS still believes that a mistake was made and they are owed a massive tax debt by the Jackson estate. So, as a result, they haven't given up on pursuing this. Now, the executors of Michael Jackson's estate are requesting a reevaluation of assets in the estate to prove that they were not undervalued by the estate. With all of this going on, Michael Jackson's 3 children, Prince, Paris, and BG, and his mother Catherine have all been blocked from the distribution of their trust funds. So, not only is the IRS trying to take a gigantic piece of Michael Jackson's estate, they're also putting his beneficiaries in a state of significant financial strain. Now, I know some of you in the comments will probably say, Karlton, these people are multi-millionaires. Why would they need the money? Oh guys, you have no idea. You might be right about some of that, but here's the deal, guys. This situation is an absolute disaster. If you're someone that's watching this, you shouldn't be happy or proud about this situation. For almost his entire life, Michael Jackson worked incredibly hard to achieve the success he had. Sure, he had plenty of drama in his personal life. Sure, he was a controversial figure, but he earned a lot of that money through raw talent and perseverance, and he wanted to leave the money he had behind to the people he cared about most. Most of us can relate to that, right? So just imagine if that happened to you. You set up a trust fund for your children, for your daughters, for your sons. You want to take care of them after you die, only to have the IRS come in and block them from receiving the funds that you left behind, while simultaneously trying to confiscate a huge portion of the estate. This is the exact opposite of what we want to happen. So, what can we learn from this situation? There really is only a few things here that are extremely important to point out that are lessons to walk away with. The first is that if you're an ultra high net worth individual, and if you're planning to leave behind an estate that is worth hundreds of millions of dollars, like Michael Jackson's, then you should absolutely expect the IRS to scrutinize your estate more than it does smaller sized estates. After all, if the IRS can find an issue with a larger estate, then it has a better chance of recovering a larger amount of money in penalties, fees, and taxes that are going to be owed to them. What this means is that ultra high net worth individuals should take extra measures to protect their estates. If you're an ultra high net worth individual, you may need to hire a small army of estate lawyers, tax experts, and other estate planning professionals to make extra sure that there's no holes in your estate plan. The IRS will look for any weakness to target you so you can't have any weaknesses. The second thing that we want to learn is that the valuation of the estate is going to be something that the IRS will likely hone in on in order to try to recoup money from you in estate taxes. This means that if you happen to be the beneficiary of a large estate, or if you're planning to leave behind a large estate, then it's crucial to make sure that the estate is valued 100% correctly. A failure to have your estate valued accurately can result in tax vulnerabilities that your beneficiaries are far better off avoiding. In some cases, the government might value your estate much differently than a private appraiser might value it. This can result in a court showdown, just like what happened with the Michael Jackson family. For this reason, reason, it is a good idea to work with highly reputable licensed appraisers in case your beneficiaries ever have to defend your estate's valuation in court. As of right now, it is unclear whether Michael Jackson's estate is in fact undervalued. So I'm not saying that the people handling this estate necessarily made a mistake, but whether or not the estate valuers made a mistake or not, it is still important for you to make sure that your estate is valued accurately, or you too could end up in a situation like the one Michael Jackson's family is dealing with. The final lesson that we can learn from this situation is that it is always a good idea to have a backup plan. In this particular case, because we are talking about a family that is so wealthy, it is unlikely that any of the Michael Jackson's children or his mother will end up in a truly dangerous financial state. But this is definitely not the case for everyone who leaves an estate behind to their family members. Some people try to set up their estates so that their beneficiaries will never have to work again. And this is all well and good, and it is great to use estate planning vehicles like trust funds to take care of your beneficiaries. But if your beneficiaries are fully dependent on your estate for all their expenses, then that can create a major problem if the IRS freezes the assets in the estate as it has done for the Jackson family. Let's talk about real estate investing. Now, regular viewers of my channel know that I always preach the virtues of real estate investing. Karlton Dennis absolutely loves real estate investing. It's no secret, I'm your boy when it comes to real estate. If you have children or other beneficiaries whose futures you want to protect, then one thing that can be highly beneficial for many people is learning how to invest in real estate. Real estate investing has an enormous amount of benefits, including cash flow, property appreciation, and huge tax benefits like being able to use rental real estate losses to offset actively earned income, W-2, 1099. We talk about it on my channel. The deductions for real estate are so incredible that it can completely dwarf the amount of cash you have to put down for a down payment to buy the property in the first place. I love real estate. For example, you might be able to put down $100,000 down payment on an investment property, but if you can accelerate the depreciation, you can get significantly more than that in deductions in your first 2 years of owning the property. What I'm trying to say is that if your beneficiaries learn how to invest in real estate, then it has the potential to make them much more financially secure and less dependent upon a trust fund or an estate to provide them with income. I'm just saying. I just became a father recently, and you can bet that when my daughter grows up, I will be teaching her how to invest in real estate. Of course, I will also plan my estate to help provide to her. However, I will never want her to be fully dependent on that, and you shouldn't want your beneficiaries to be either if you can avoid it. So, what will happen to the Michael Jackson family? There are two main scenarios that could play out in this outcome. The first is that the Jackson estate wins the court case against the IRS, and the second is that it loses. If it wins, then the money in the trust fund will be allowed to be distributed to the beneficiaries as it did previously according to the terms of the trust. The second scenario is the IRS actually wins the court case this go round. If the IRS wins, then it could collect upwards to $700 million in taxes and fees from the estate. This would of course dramatically reduce the size of the estate and seriously limit the amount of money that the Michael Jackson beneficiaries could receive from the estate over the course of time. I can't tell you to what extent it would limit it because there is much to debate around this and I'm not in the courts, so we don't know how much money would be left over after the IRS collected its payments, but I will keep a lookout online for you. The main thing that I want you to remember from this video is that it is better to set your beneficiaries up to have multiple different income streams. That way, they will never be fully dependent on your estate for income. As I mentioned before, real estate investing is one of the best ways to enhance financial security. If your children have real estate investments of their own, then they will potentially be able to benefit from the cash flow and property appreciation for many years to come in the future. If you want to learn how to invest in real estate and how to access all of the key tax breaks available to real estate investors, then here's what I would like you to do. Click on the link below in the description to sign up for the Tax-Free Wealth event. This event is starting off August 5th through August 9th. Over the course of these 5 days, I'm going to teach you critical information around how to invest in real estate to offset your W-2 and your 1099 income taxes. I'm also going to go over a wide variety of other strategies, income shifting strategies, niche specific strategies that we utilize here in my firm. Today has been a great video for me to cover because this is hopefully going to be the video that changes your mind around how you wish to plan your estate for your family. Thank you so much for watching this video. Go ahead and like, comment, and subscribe, and I'll see you on the next one. Cheers.